Today we're going to analyze the Euro USD currency with the WTT strategy. Now, what we would do, which I think is going to be a bit more interesting, is we're not really going to look at the chart itself. We're going to just use our Williams to tell us when we're going to come into the market. So I'm just going to make the Williams most of the chart like this, and we're going to go and look for the bits and pieces that we know are entry points just by looking at the particular pattern. So let me just randomly just go past and let's see if we can find something. Right, here's one. This looks good. If you can see, what's the time? It's 2:30. That's good. If you can see, we've got the Williams 17, which enters the strong buy zone, and then eventually you can see the Williams 100 passes the 50. So if we mark here, yep, that will be our entry point to the market. I really actually like that one. I might be wrong because this is not a 100% strategy, but that's where I would come in, definitely. So let's have a look. Right, so it's matched up with this. So we would come in here, which is good, and you can see 345, and you can see it's a very good actual deal. One thing I will be I might not have went for that, to be quite honest, because if you look, you see this red line, this is the 89-day moving average. I don't like coming into the market when it's below that. I don't like it because it's this, as far as I'm concerned, is sell mode until it passes this. However, looking at the Williams Direct, I definitely would have taken that. It's strong and it's decisive. So I might reconsider this part here. So let's do another one anyway. Let's see what happens. Let's look for another situation where the yellow line goes up into this area and the blue line goes past this. Here's one here. This goes down. This one's down. Right, that's a sell. 8:15. It's a tricky time. It's not in the yellow. I mean, the W17 is not in the sell zone for too long. It is a trade which I would take. Let's have a look what happens. Again, this seems to be good. It might not. It might stop you out because this here, can you see this is a blue candle or a bullish candle? You can come in there, but you will have to put your stop loss behind the red, the significant red candle. So if we did that, our stop loss would be 13 points and it will work. And as you can see, the candle is below the 89-day moving average, so I would be comfortable with that. And if we do stay in the market, we would stay in until a bullish candle crosses. So we'll stay into around here, 24 points, 12 points, 15 points. Very good. That's very good. Right, let's look at another one. Let's see if we can find another one. If you don't know what's happening here, either look at the previous videos or just send me a shout. We are looking, I'll tell you again, we are looking for the W17, which is this, the Williams 17, to be passing and going into a strong buy zone or a strong sell zone at the same time or near the same time that the Williams 100 is going into, well, it's passing the 50. So this yeah, this is okay. It's gone in here. See, we would have taken this trade as well, and it looks, by looking at it, doesn't look like it worked, but we would have taken that trade there. No, sorry, we would have taken it here. This is where we would have taken it, right there, right? We would have taken that trade, and we also would have taken this trade. This one's a bullish one, this one's bearish. Now let's see what happened here. So with the bearish trade, it's not really, nothing really happened. That's 2 or 3 points. That would have been 6 or 8 points, and we probably would have got stopped out. We don't get stopped out until this trade here, this one here. So we would have, if we put the, yeah, we would have possibly lost on that one, unless we jumped out, because it doesn't look like it's doing much. We probably would have lost on that. Not much, but we would have lost 8 points. And this one here, as you can see, I probably would not have taken that trade, even though it does work in our favor. But because of the size of the candle, and also, can you see it below the 89 moving day, I would have objected to that. That candle is a very expensive stop loss. 24 points. If that goes against us, that's a lot. Even though, can you see, look, it goes very, very much in our favor. So I'm not sure. I could have done it. I'm not sure. I'm just thinking, would I have done it? I could have put a smaller lot size on that, because it is a significant candle, and it's a price indication stating that it's going up. So possibly would have went there. If we did, we would have got a very, very nice run. Nice run. And this is where we would come out here. Can you see where it passes? It passes the 10-day here. It doesn't pass anywhere. Look, no red candle until here. So that would have been a fantastic run. 98 pips for 22. So you get what you pay for, really, on that one. So that would have been a very, very good trade. Just one more for you lot, and we'll take it. Let's have a look if there's another one. Here's one here. Right, can you see this one? Didn't pass, we wouldn't have went. This one does pass, and the yellow comes into that area first. So that would have been a very nice one. Very nice. That's like textbook right there. That's where you would come in, right there. Let's have a look. I'll be happy. Look at that. Beautiful. Oh, that's just textbook, isn't it? Look at that. So you'd come in there, and you would stay in to here. 68 pips with a 14 pip stop loss. Brilliant. Excellent. So the Euro USD seems to be something which we can use our WTT strategy on. We will try it and test it and see what happens.